Hi, everyone. Welcome to another episode of Making Sense, where we really dive in and break down banking and try to make sense of it all. So the last few years, especially the last few years, the market has seen several increases and decreases on rates from the Fed. And we all know that in the world of mortgage, it's kind of an ever-changing landscape right now. So this is why I have invited Tracy Allen, a mortgage banker with NBC, with us today to let's just talk about mortgages. I myself am still a renter, so this is like perfect for me.
Good.
Because I don't know the whole world of mortgage, and it can be a little bit daunting. And like I said, especially now, because things move so quickly that you really kind of have to have things figured out before you even kind of jump into this whole buying a house realm. So I'm really excited to have you here. Tracy has 12 years of experience, so she's seen a lot of it. She may not have seen it all, but she has seen a lot of it. So I'm really excited to have her. And let's just kind of dive in here, and let's just start baseline. What is a mortgage?
Good question. So a mortgage is going to be a lien that's going to be placed on either a home or a vacant
I have to
land.
stop you. Sorry.
Okay.
One, I forgot to tell you about the jargon jar. So the jargon jar is what happens when you use words that are too banker-ish that the general public wouldn't know. And then if you do, you have to pay in a quarter. So I'm going to make you pay in a quarter because you said a lien.
Okay.
Don't know what that is.
All right. So
Tell me what a lien is.
a lien is a loan that we're going to put against a property.
Okay.
So whenever you get a lien, it means it's a loan tied to something.
Oh, okay. Okay. Got it. So then just tell me again, what is a mortgage?
Absolutely. So a mortgage is going to be tied to a property, whether it be a home or vacant land, any type of real estate.
Got it. And then kind of like I talked about when buying a mortgage, a lot of unfamiliar terms get thrown around. So can I kind of list the ones that I have and we can talk about?
Yeah.
A lender.
Good one. A lender would be like us, NBC. So we're the bank that is going to be borrowing you the money you need to purchase your real estate.
Okay. And then a borrower
would be you, the person who is going to be purchasing.
Okay. Down payment?
Down payment is going to be your money that you're going to be putting down towards the purchase of the home or the loan.
Okay. And we've always, we always hear the 20%. What is that 20? So that's 20% of the total price that you're going to pay. Is that like a set in stone amount? What happens if you're below? What happens? Can you pay more? Tell me a little bit about it.
So 20% down payment is pretty standard. A lot of people think you still have to have 20% down to purchase a home. You don't. Okay. You can do it with sometimes as little as no money down. If you don't have that 20% down, you do have to carry what's called private mortgage insurance. And that 20% would be 20% of the purchase price.
Okay.
So if you don't have it, which most people don't, you just carry private mortgage insurance, and that sticks on your loan until you get to 80% loan to value. I did another jargon, didn't I?
Well, no, you did. You did good. You said loan to value, but I'm just I don't
Too much?
I don't know what that is. What does that mean?
Okay. So loan to value would be how much your house is worth as to how much you owe.
Okay. Got it. So once you pay down, sorry. So how would I know when that falls off?
You actually will find out at closing. So we're going to give you what's called an amortization schedule to tell you when you get to that point of when that would drop off. Otherwise, you can always reach out to NBC and we can help you out with that.
Okay, so I don't need to be I'm at 77% this month.
Right.
Okay.
Absolutely. Reach out to us at any time.
Got it. So I have one more question surrounding down payments. I'm sure that you can, but you can pay more than the 20% down, correct?
Absolutely, yes.
Okay.
And you can have gift funds for your down payment as well. So if a family member wants to help you with your first home, great. They can do that as well.
Okay. And that would just be go towards your the 20% number.
Exactly.
Okay. Got it. Loan amount.
So the loan amount is the amount that you actually borrow. So that's the amount we're going to give you the loan for. That's how much you're going to be paying back to the lender.
Got it. And I've also heard the word principal thrown around.
Yes.
Same thing.
So that's exactly it. That's the amount of the loan.
Okay. Because why call something one thing when you can call it two things?
Right.
And
Absolutely.
really confuse people. Okay. Loan term.
So the loan term is how long you take your loan out for. So
Okay.
there's a good variety of years you could do that. You could start out at 10 years, go all the way up to 30 years, whichever works best for you.
Okay. And I've heard a lot of, just like 15 and 30. Is that like a set thing, or can you do I want a 22-year loan?
You could.
Okay.
Yeah.
Okay. Do most people do 15 or 30?
Lately, it seems like a lot more are doing 30, just because
Okay.
the rates seem to be pretty similar, or not too far off. So it
Yeah.
they stretch it out a little bit longer. There's no prepayment penalty, so you can always pay it off early.
Okay.
So go with that payment that's comfortable for you as well.
So how do interest rates play into the length? Like if you're going to do a 15-year loan, would your interest rate typically be higher or lower?
Usually it's a little bit lower.
Lower. Okay. Why?
So then that'd give you, we take our rates off of the Fed. So
Okay.
whatever the Fed bases your rates on for the day. There's actually been times where the 15 and 30 were the same.
Okay.
So really that's a day-to-day kind of thing as to
Okay.
what the rate is.
Interesting.
As far as the rate and the term, some people want that lower payment just so that they can, if there's months that things are slower, they want to pay a little bit less,
Yeah.
they can. But maybe other months they want to apply extra and still pay it off early. You certainly can do that as well.
Okay. Interest rate is the rate that you are
Paying to borrow the money.
okay. And I get a house, my interest rate's 6%. 2 months later, the rates go to 6%. Is my interest rate now 6%, or am I 5%?
Your rate stays the same.
You're locked in.
So once you lock in your rate, that's your rate for the term of the loan.
Okay. So that's when the whole this is full honesty. When the whole refinance thing happened, I was like, I don't really get this. I don't know
Yes.
what it means, which I understand now that interest rates were maybe what they are now, and then they fell to
Crazy low
2%.
numbers.
So
Yes,
then everybody's like,
exactly.
I want to lock in that rate.
Yes.
So that's when you refinance.
Yes. And that's
Got it.
actually, some people would come in and go from, maybe they had a 30-year before and they were at, say, 6%.
Yeah.
Rates dropped and they were down to maybe a 3% to do a 15-year.
Yeah.
So not only did you do a lower rate, but you also did a lower term.
Right.
So then saved you a lot of money in the end.
Okay. You said that on a 30-year that there's not a prepayment penalty. Is that always can you always pay back your loan early, or are you sometimes going to run into that?
Our
Prepayment.
loans, you can pay them off early.
Okay, without any sort of
Without penalty.
Okay, got
Correct.
it. And I love these ones being in the banking world. Fannie Mae and Freddie Mac. What are these? Who are these people? Why are they named that?
Right? They sound like our best friends around here. So, yes.
Yeah. What are these loans?
So they are government backed, but
Okay.
they're loans that work with the banks.
Okay.
So it's not technically a government loan,
Okay.
but they're government backed. So you're still going to do your loan with MBC,
Mm-hmm.
and we may or may not use Fannie Mae or Freddie Mac as a backing.
Okay.
And these are for your conventional loans.
So in the if we were to compare this to the business world, is this the same? I think you know this as the SBA.
No. It's
No.
a bit different. Yeah.
Okay. And then what's the difference between Fannie and Freddie?
They're guidelines, honestly.
Okay.
So, just the way they do their underwriting, which is going to be another term that's tough.
Yeah.
So, they just have different requirements.
Okay. I'm gonna have you put in a quarter. Tell me what underwriting means.
So, underwriting is some great people that we work with that review your file, and they make sure that everything that you give us fits into the criteria that Fannie Mae or Freddie Mac requires.
Okay.
So, they look over things, so income documentation, asset documentation, just a second set of eyes to make sure that you do qualify for the loan.
Okay. Do you know why they're called that? Have you ever heard why they're called Fannie Mae and Freddie Mac?
No, actually, it's a great question, though.
I
I
need
do
to,
want to find out, actually.
I need to Google that because, it's just such a
Yes.
bizarre term. Okay, moving on. Okay, so let's say I'm on a house shopping site. I find a house. I want to do it. How do I do it?
Well, you got to meet with your banker.
Okay.
So whether you do it online, in person, or over the phone, start with an application. The application process is very simple.
And you're going to give me this application?
Absolutely, yes.
Okay.
So if you want to meet in person, we're going to just talk this through. I want to know, what do you want to do? What's your intent? So you want to buy a house for you.
Yeah.
What's your price range? What's your comfort level? I want to make sure that you are comfortable with the house that you're looking to buy. And then we start that process of applying. So gathering your basic information, name, birth date, social, your income information, assets, things like that.
Okay.
Pretty simple, pretty painless.
So, I'm just going to say you're my mortgage banker. Will you help me figure out how much like I can comfortably spend on a house?
Absolutely.
Okay.
So that's one of my number one things is, what is your comfort level?
Yeah.
Just because the paper may say that you qualify for more
Right.
doesn't necessarily mean it's a good idea to go that high.
Yeah.
So we want to stay with where you're comfortable. Ultimately, we want you to be in this house, love the house, and still be able to afford a lifestyle outside of it.
Right. Okay, so let's say I found a house within the price range. What do I do now? Like, I know I heard pre-approval and pre-qualified.
Yes. So the difference between the two, pre-qualified is, we've did an application. Maybe you didn't give me all of your documentation that is required. So like W-2s, pay stubs, bank statements, those things. But I'm looking at your file saying, you look good, you can still make an offer. I'm going to need that documentation. Once Underwriting's reviewed it, you are pre-approved.
Okay. Got it.
That's the difference. You can still make offers, which if you find a house and hopefully you're working with a realtor, you can still write up an offer and get me that documentation. Because right now, you want to be at least pre-qualified before you start looking.
Right.
So that way you're ready to go.
Yes. How and are you pre-qualified for like a set amount of time before I'd have to give you like new documents? Like, let's say I'm pre-qualified and then 6 months later I would like lose my job or something.
Exactly. So I like to stay in touch with my customers.
Yeah.
Just because life happens. Things change. Maybe you've saved up more money. Now you can afford more of a house. Or maybe you had a job change. So it's a good idea to just stay in contact with your banker.
Okay.
Keep them up to date on everything that's going on in your life.
Yeah. Okay, and let's say pre-approval. So that's, I mean, really, in today's market, like, you kind of need to be pre-approved, right?
Mm-hmm.
You know, because, like, a buyer is going to look at somebody who's pre-qualified and they're like, well, that might fall through, so I'm going to pick somebody who's pre-approved, right?
Yes, there are pretty similar. At least you've met with a banker. I guess the biggest thing is that you want to go to a banker before you start looking at houses.
Yeah.
I prefer people give me their stuff right away, just so that we make sure that we're all on the same page. Mm-hmm. But again, it's really the buyer's choice.
Yeah. Okay, so I'm pre-approved to a certain level, and then, like, let's say I have to start bidding higher on a house, because that's for sure happening.
Yes.
Is that, like, am I only pre-approved to a certain amount, or am I okay? I'm okay to bid higher until I would hit the max amount I'm approved for?
So that can kind of be a twofold question. One of them, when you do come in to get pre-approved, we usually get like a set dollar amount. So you can go up as max, up to a max dollar amount.
Okay.
Now, hopefully you're working with a realtor at this point, and they're going to know how much the house is going to be worth.
Okay.
So that you don't want to pay more than the house is worth.
No, I don't want to do that.
No. So that's where your realtor is going to help you out when writing that offer.
Okay.
To make sure that you're not going above and beyond.
Got it. Okay, Tracy, I want to talk a little bit more about the pre-approval letter idea. So I'm a little confused. I just want to make sure I'm thinking about this right. So let's say, NBC looks at all of my financials and they're like, oh, you're approved. Really, I mean, like you guys could, if you really wanted to, buy a house for $600,000. But I personally know, like, I don't want to be house poor.
Yeah.
I don't want to spend that much money. I want to only look for houses at $300,000. So does my pre-approval letter say $600,000, or does it say what you and I had discussed, and I would be comfortable like paying $300,000? Does that make sense?
Makes total sense. So when I'm writing you a pre-approval letter to make an offer on a home, I'm going to put that home's property address, not a dollar amount. You're going to know how much you're approved for, and your realtor is going to know how much you're approved for. That's going to be your responsibility to stay in your comfort level.
Okay.
So if we say you're pre-approved for say 600,000, but you are comfortable with 300,000, I'm going to encourage you to stay closer to your comfort level.
Yep.
Even though
Okay.
the numbers say you could actually go for more.
Excuse me. Yeah, that's really good to know too, because otherwise, you know, like people can look at this pre-approval letter and they're like, oh, she's only offering $350, but she has $600,000. Like,
Exactly.
let's push on that a little bit. So that's really great to know. And I think what else is just interesting in this market, it's really comforting to know that as my mortgage banker, like you're looking out for what I'm comfortable with. Because in this market, things move so quickly and you get forced to like bid so high or over, like, and you have to do it so quick that, you know, you can be like, hey, yeah, technically you can do that, but we did talk about that you wanted to be at this level. So it's nice to have a banker who will bring you kind of back to that reality of what you guys had first discussed.
Absolutely. It's so easy to get caught up in the moment.
Yeah.
Or even when you're looking at houses online and, you know, maybe there's a little bit more of a curb appeal to some that are up in that higher bracket, but you really don't want to go that high because, again, you want to have a life outside of your house.
Yeah.
Or maybe this is your starter home and in a few years you're thinking you're going to sell that and move on to something else. I'm going to try my best to keep you grounded as to what you're wanting.
I love that, and I just love that, like, as my banker, that you're in my corner like that. Because like you said, it's so easy to get caught up in the moment. It's like, oh, it's just 20,000 more. Like, it's only this much over all the years. But yeah, it's before you know it, you're sitting down at a closing and you're like, oh my gosh,
What did I just do?
what did I just do?
Yes.
So this has been so great. I know that some of the questions I asked may have been kind of basic, but they're honestly like the questions that I think the general public have. So I appreciate just being able to ask you those and have you, you know, just kind of break it down for me. So anything else that you want to add before we wrap up?
I think the biggest thing I would say is don't be intimidated.
Yeah.
Come in and sit down with the banker, do it over the phone, anything, but just take that first step. Maybe you're not looking to buy a home for another year,
Yep.
but sit down, talk about it, see what you need to do to make the next steps to get ready to buy a home.
Yes. And just start like kind of building your like mortgage vocabulary, you know, like kind of what we
Yes,
just talked
absolutely.
about. Like, so then you're not in the heat of the moment
Yes.
trying to figure out what a principal is
Right.
and like make a payment or make an offer on a house. Like, so I think yeah, that's a good point. Like, just start figuring out like what this stuff means and like what it would mean for your situation. And you're always willing to just have those conversations.
Actually, that's my favorite part of my job is just that first initial contact with people
Yeah.
because they're either excited, they're nervous, they just really don't know what they want to do, but they just want somebody to talk to, like talk those questions out
Yes.
and just maybe prepare a plan for the future.
Yeah.
So
And this is me telling the viewers, ask the questions that you
Yes.
think are silly. Like,
yes.
Tracy
please.
doesn't care.
No.
Ask what you need to ask. So again, thank you so much
You're welcome. Thanks
for
for having me.
joining. And we will see you next time. Thank you.